In insurance, you will get surprises. Now, the test of a good management is how many surprises you get, but there's no way you'll get no surprises. I think insurance, which will continue to have surprises in it, will turn out to be a very, very good business.
Ordinary insurance company is not a good business.
And there are plenty of people that are, I'd have to say, crooked in insurance. It's a field that attracts chicanery. Often the same people come back again and again.
One of these fraud artists, Warren caused me to meet years ago, and his proposition was that he had this perfectly marvelous business. He says, we only write fire insurance on concrete bridges that are underwater. He says, it's like taking candy from babies. And
we were the babies.
I looked in his eye and I thought he was kidding or something. He wasn't kidding.
The insurance business provides us with float, and float is money that we hold that doesn't belong to us. It's like a bank having deposits. A bank has deposits. The money doesn't belong to it, but it holds the money. Now, when a bank holds deposits on everything except demand deposits, there's an explicit cost, an interest rate attached to it. And then there are the costs of running the system and gathering the money. So there's a cost to getting what they would call deposits and we could call float. In the insurance business, a similar phenomenon takes place in that policyholders give us their money at the start of the policy period, and therefore we get the money paid in advance for the product. And secondly, it takes time to settle losses, particularly in the liability area. If you bang up a fender on your car, it's going to get settled very quickly. But if there's a complicated injury or something, it may take some years to settle. And during that period, we hold the money. So we have, in effect, something that is tantamount to the deposits of a bank, but whereas the deposits of a bank, it's quite easy to calculate the approximate costs. In the case of the float that the insurance company has, you don't really know what the cost of that float is until all your policies and losses, your policies have expired and your losses have all been settled. Well, that's forever in some cases. So you're only making an estimate as you go along of what that float is costing. Float per se is not a blessing. We can show you many insurance companies that thought it was wonderful to generate float, and they have lost so much money in underwriting that they'd be better off if they never heard of the insurance business. But the job is to get it in increasing quantities, but above all, get it cheap. And that's what we work at. And you do that in the business through having some kind of competitive advantages. You won't do it just by having an ordinary insurance company. The ordinary insurance company is not a good business.
I got my knowledge of insurance. I got this huge head start. A fellow named Lorimer Davidson, who is now 96, spent 4 hours or so with me one Saturday morning in January 1951, explaining to me how GEICO worked. And it was a marvelous education, and it got me so interested in not only how GEICO worked, but how its competitors worked, how the industry worked, that I just started reading a lot of other reports. I guess I took one course in school on insurance. I don't remember a thing from it. I have no idea what the textbook was or anything. It had no value to me. But so I never really had any background in insurance. Nobody in the family was in the insurance business. And until I talked to Davey, it just hadn't been something crossed my mind. The only reason I was down there was because my hero, Ben Graham, was listed in Who's Who as being the chairman of Government Employees Insurance. He'd been the chairman of, he was also the chairman of the Market Street Railway Company in San Francisco. Fortunately, I went down to GEICO instead of out to see the Market Street Railway Company. It was closer. But my own education about insurance came from just reading lots of reports. I mean, I would say that if I started the day fresh and I didn't know anything about the insurance industry to speak of, and I wanted to develop some expertise, I would probably read the reports of every property casualty company around, and I would go back sometime and I would probably get the best manuals and look at them. I would just do a lot of reading. I used to go down to the Department of Insurance in Lincoln and go through the convention reports and the examination reports, and they'd give me some little table someplace, and I keep asking for these reports. They have to go way down in the bottom of the to get them out for me, but they didn't have much else to do, so they were always happy to do it. And that's the way I learned about it. And it happened to be a productive field to learn about that way. And I really think that something akin to that is the best way now. I can't think of, you can read some analyst reports. I think you can learn something, frankly, by reading the Berkshire Hathaway annuals for 20 years and reading the insurance section. I think it'll teach you something about the economics of insurance. So I would do it by reading, and if you can find somebody that knows the business well, who's willing to spend some time talking to you about it, they can probably shorten the educational period and give you some help.
In insurance, you will get surprises. Now, the test of a good management is how many surprises you get, but there's no way you'll get no surprises. And if you look at our history, you will see some years when our float cost us a lot of money. You will also see a history where over 33 or so years that it's been a very, very attractive business. Our name causes problems. I think National Indemnity, we had a fraud, as I remember, down in Texas where an agent was using our paper, which incidentally was the same problem we had, the one that cost us so much. And some guy is out there writing bonds on surety bonds on construction of schools, and he says he represents National Indemnity, and the contract proceeds. And of course, we've never heard of the guy, but if you get a school district in Texas with a half-finished school, and the choice is whether the taxpayers ante up more, or whether you find that this guy had apparent authority as an agent and so on, and therefore we should pay on a policy we never heard of, written by a guy we'd never heard of, on a school we'd never heard of, we'll end up paying. So the surprises are unpleasant. I think insurance, which will continue to have surprises in it, will turn out to be a very, very good business for Berkshire over time. It's the best one I know about that we can do in increasing scale over time. It's a tough field. The average company is going to do poorly. We think we have some very special companies, and we really do think over time we will acquire and utilize float at a cost that's very, very attractive. It won't be zero like it's been in the past. I don't know how many surprises I've had in insurance over the 33 years or so we've been in it. One of the surprises, incidentally, worked to our incredible benefit. GEICO has been a great, great company since I first went down to Washington, and even before that, and met Lorimer Davidson almost 50 years ago. But they made a mistake in the early 70s that really did bankrupt the company. But fortunately, there was an insurance commissioner named Max Wallach in the District of Columbia who saw that it could be resuscitated, and that mistake enabled us to make many, many billions of dollars. So mistakes can be useful on occasion too.
Perhaps the most irritating way to lose money there is to be taken by a sort of obvious lie, but it happens.
And there are plenty of people that are I'd have to say crooked in insurance, because it's a product where you deliver a piece of paper and somebody hands you money, and that intrigues people. You don't even hand them a dilly bar, or anything in exchange. They hand you a lot of money, and you give them a little piece of paper. And of course, when you get into reinsurance and all that, then you hand that little piece of paper to somebody else and try and get them to hand you money. And all the way along the line, you have brokers who are getting big chunks of money for sort of papering over some of the weaknesses in the project, and sometimes they may even be in on it. So it's a field that attracts chicanery, and often the same people come back again and again. It's amazing to me. So I would say that we will get a surprise or two over any 10-year period in insurance. It's almost impossible to avoid. We should try to minimize it. We do try to minimize it, but I would not want to bet my life that we've seen the last of a unicover type situation. They're always just a little bit different enough so that it doesn't get spotted, or somebody down the line doesn't get the message. But I don't know. Don't you think, Charlie, we'll see another one?
Well, perhaps so, but it was a long time from one to the other.
Yeah, right.
And maybe I'll be able to get through without another. One of these fraud artists, Warren caused me to meet years ago, and his proposition was that he had this perfectly marvelous business. He says, we only write fire insurance on concrete bridges that are underwater. He says, it's like taking candy from babies. And
we were the babies.
and I looked in his eye and I thought he was kidding or something. He wasn't kidding. I mean, these people believe this kind of stuff.
To date, with Berkshire, in the 29 years we've been in the business, it appears, never certain, because you don't know for sure what's going to happen, but it appears that our float has not cost us anything on average. It's been years when we've had an underwriting loss. When there's a cost, there's been years when we had an underwriting profit, and so we had a reverse cost. So we have obtained that float on very advantageous terms over the years. Far more, I mean, fully as important as that. It's important to get it at a low cost, in our case, no cost. But the other important thing is that we've grown it dramatically, and so we've gotten more and more money without having any cost attached to it. And if we still had our 17 million, I guess, of float that we had in 1967, and it was no cost, it would be very nice. But 17 million of free money is worth something, but it's not worth a ton. Having 7 billion, if we can achieve that as free money, it's worth a lot of money.